If you are a business owner, freelancer, or a professional trying to figure out how to file your taxes without all the complicated paperwork, you are in a right place. Today we are talking about something super useful, presumptive taxation under section 44AD and 44ADA of the Income Tax Act. This is a game changer for small taxpayers who want to save time, avoid audit, and still stay fully compliant with the law. So, what is presumptive taxation? How does it work? Who can use it? And how much tax do you actually pay under this scheme? Let's break it all down in simple terms. Alright, let's start with section 44AB. This section is designed for the small businesses like a shopkeeper, trader, service provider, or anyone running a small enterprises. Now, who can opt for this scheme? It is available to resident individual, Hindu undivided families, and a partnership firm, but not for the LLPs. Instead of showing your actual profit, you can simply declare your income as a percentage of your turnover. If you receive a payment digitally, you can declare 6% of your turnover as income. And if you receive payment in cash, it's actually 8%. And what's the turnover of limit? You are eligible if your turnover is up to rupees 2 crore. But if 95% or more of your receipts are digital, the limit goes up to 3 crore, which is a big boost for the business going cashless. Let's move on to section 44 ADA. This one specifically designed for the professional. So, if you are a doctor, lawyer, architect, engineer or accountant or in any other specified profession, this scheme is for you. Under section 44 ADA, you can declare 50% of your gross receipt as your income. That's 50% is presumed to be your net profit and you will be taxed on that amount. And just like section 44 AD, the biggest benefit is you don't need to maintain detailed books of accounts. No audit, no complex paperwork, just a simple way to file your taxes. Let's talk about benefit of choosing section 44 AD or section 44 ADA. Starting with section 44 AD, which is for small businesses. You can declare your income as a 6% of your turnover if received digitally or 8% if received in cash. It's a simplified way to declare income, no need for complex calculations. You can file your return easily using ITR 4 form. And the best part, you don't need to maintain your detailed books of accounts. This will save your time, efforts, and compliance cost. Now, let's talk about section 44 ADA, which is for professionals. You can declare 50% of your gross receipt as income and presume to be your profit. Again, no need to maintain books of accounts and go through audits. Filing is simple and quick using ITR 4 form. It's perfect for freelancers and professionals who want to keep things hassle-free. While Section 44 AD and Section 44 ADA offer simplicity, they do come with their drawbacks, and you should know that. Start with Section 44 AD. Once you opt in, you are required to declare your income under this scheme for 5 consecutive years. If your actual profit is lower than the presumptive rate and you don't declare it, you will need to get your accounts audited, which defeats the purpose of simplicity. It's not ideal for businesses with thin profit margin since the scheme assumes a fixed percentage of profit. You also can't claim deductions like depreciation or other business expenses. Next one is Section 44 ADA used by professionals. You are presumed to earn 50% of profit, which may not defeat reality, especially if you have high operational cost. Like 44 AD, you can't claim additional business expenses or deductions. So, if you are a professional with significant cost like equipment, staff, or rent, this scheme might not be the best fit for you. These schemes are great for simplicity, but not always suitable for everyone, especially if your actual expenses are high or your profit margins are low. Let's take a look at the latest update for assessment year 2025 and 26 under section 44 AD and section 44 ADA. First up, new profession code. Make sure you report your profession using the correct code while filing your return. This is now mandatory for you. For both sections, the entire advance tax must be paid in one installment by 15th March of the financial year. No more quarterly payments. If you are not eligible for presumptive taxation, you may now be required to file using ITR 3 instead of ITR 4. Now, here is a big update for Section 44 ADA. The gross receipt limit has been increased from 50 lakhs to 75 lakhs. But there is a catch. This higher limit is only available if 95% or more of your receipts are digital. That means payment via bank transfer, UPI, account pay checks, and a similar. Here is a side by side look at Section 44 AD and Section 44 ADA to understand how they differ. Who can use it? Section 44 AD is for small businesses like a trader, shop owner, and a manufacturer. Section 44 ADA is for professionals like a doctor, lawyer, architect, and a consultant. Who is eligible? 44 AD applies to resident individual, HUF, and a partnership firm. But Section 44 ADA is limited to resident individual only. So firms and HUF are excluded from them. What is turnover or receipt limit? For Section 44 AD, the cap is rupees 2 crore in annual turnover. For 44 ADA, it's 50 lakhs in gross receipt. Though remember, that goes up to 75 lakhs if 95% of your payments are digital. What is presumptive income rate? Under 44 AD, you declare 6% of your turnover for digital payments or 8% for cash. Under 44 ADA, it's a flat 50% of gross receipt, presumed to be your profit. So, in short, choose 44 AD if you run a small business, choose 44 ADA if you are a professional with moderate receipt and prefer a simplified tax processes. Let's compare a few more features. First, under both sections, there is no requirement to maintain detailed books of accounts. This makes compliance more easier for small taxpayers. Next one is for deductions for business expenses are not allowed. Income declared is considered final and no adjustment for rent, travel and depreciation. Next one is under section 44 AD, once you obtain, you are required to follow it for 5 consecutive years. But in section 44 ADA, you have flexibility. You can opt in or out each year depending on your situation. These features help you to decide which scheme offers in right balance between simplicity and flexibility for your business or profession. For more quizzes and assignments, you can reach out to us on Community. And that's a wrapping complete video on presenting taxation. Stay compliant and don't forget to like, share, and subscribe. Success Mandra by Fintax. Thank you.